Well, there's a lot to like on Facebook, just maybe not today. As we reported yesterday, the social networking giant announced its first ever acquisition of a hardware company, paying $2 billion for the privately held Oculus VR, which makes virtual reality goggles. The trouble is, Oculus has no real revenue just yet, and its technology is largely untested. And it comes a month after Facebook paid an astonishing $19 billion for the mobile messaging app WhatsApp. Investors will ask questions later. Today, they sent shares of Facebook tumbling 7%. That's their worst day in 4 months. Josh Lipton has more on Facebook's takeover of Oculus and the company's plans to move into a virtual world.
That social networks are going to be...
The computing platform of today is mobile. The computing platform of tomorrow could be virtual reality. That's the big bet Facebook's Mark Zuckerberg just made with his $2 billion acquisition of Oculus, which develops virtual reality technology. Users put on a headset and feel like they're inside and part of a video game. It's a totally immersive gaming experience, which Facebook sees as the next big opportunity.
It seems like they've done a pretty good job of securing market share and opportunities when it comes to mobile. And they're thinking about what's next. And to them, seemingly, virtual reality is one of those areas where you could see some new paradigm.
Zuckerberg says virtual reality has all kinds of applications. Imagine feeling like you're courtside at a game, talking one-on-one with your doctor, or studying in a classroom halfway around the world.
Is that clear?
This isn't just sci-fi fantasy. Sony last week let me try out its virtual reality headset. I was virtually transported underwater in a cage, surrounded by sharks. It was so real that after a few minutes, I was ready to throw off the headset. So what's the business model Zuckerberg imagines? He says Facebook isn't looking to make money off the hardware. Instead, he sees virtual reality as a new social network, a new way of communicating where users can come together and also buy goods and services. Analysts say the acquisition is also about perception, making sure Facebook is thought of as a dynamic company pursuing cutting-edge technology.
There's clearly a kind of land grab that seems to be going on in Silicon Valley when it comes to not only acquiring technologies and talent, but also perceived innovation.
It's impossible to know whether Zuckerberg is right and virtual reality will really become the next major communications platform. But a $2 billion bet, analysts say, doesn't seem crazy for a company of Facebook's size. Josh Lipton, Nightly Business Report, Menlo Park, California.
Let's turn now to Victor Anthony for his thoughts on Facebook. He's managing director and analyst at Topeka Capital Markets. So, Victor, is this a crazy move, or is this makes sense in terms of a big grand plan that Mark Zuckerberg has in mind?
Listen, I'm a strong believer in Facebook's core platform. I've been a bull since day one. I get the logic behind this acquisition that virtual reality could be the next generation platform, and with Facebook's ownership of virtual reality plus social, they were able to leverage the platform outside of gaming into new communications and social and enterprise use cases. So I get that. However, I am somewhat cautious, and I'm taking a wait-and-see approach on this acquisition, and for two reasons. Number one, they talked about lots of monetization opportunities last night on the call. However, they weren't exactly clear what those are. So the financial payout for this particular acquisition is unknown, as well as the timing of this financial payout is unknown. And number two, there's an element of risk in Facebook's business model that did not exist 2 months ago, in that they're currently digesting 2 acquisitions. If there's any sort of hiccups through the integration process, I fear that could distract the management team from the core platform, which is performing extraordinarily well today based on my checks.
Mm-hmm. You know, Victor, not too many software companies have done all that well. Notably, Apple, a different one, but it began as a hardware company. Not too many software companies have done well when they've gone into hardware. What's the history tell you?
Well, listen, I think, what Facebook is trying to do is trying to, expand, outside of their core platform and attract a new base of users and create and address any sort of new platforms that exist in the future. So I get what they're doing. Like they said last night, they're not really looking to be a hardware company. They're just really looking to use the software and expand that software.
All right. Victor, if you had to describe Facebook 2 to 3 years from now? Give us a short description of what the company's going to be known for.
Well, I think it's still going to be known as a social platform where everyone essentially around the globe really just coalesces and gets together and communicates. So it becomes, I think, what is a communications platform. It becomes a search platform as well. And I think it becomes a platform, a knowledge-based platform where you could just essentially just find whatever you're looking for.
You have a buy rating on this stock, Victor?
Yeah, I do have a buy rating. I do have a $75 price target on the stock.
Do you feel as good about that buy rating today as you did Monday?
Well, like I said, my buy rating is predicated on the core platform, which I think is performing extraordinarily well. I do think there's some sort of risk now in the business model that didn't exist 2 months ago because there's 2 acquisitions. So, you know, I'm taking a wait-and-see approach. I am somewhat cautious, but I'm still at a buy. I think the core platform, which what my estimates are based on, is still performing extraordinarily well. I would take advantage of the weakness.
All right. Victor, thanks for coming by and talking with us. Victor Anthony, Managing Director with Topeka Capital Markets.